Today we're going to unpack one of the absolute wildest business pivots you will ever see. Just imagine a company that's famous for its cozy, eco-friendly wool shoes suddenly deciding its entire future is, well, in artificial intelligence. It sounds crazy, but that is the true story of Allbirds.
You know, calling this a pivot really doesn't even do it justice. On one side, you've got the Allbirds we all knew, right? Sustainable wool shoes. And on the other, its brand new identity, a high-tech company that provides AI compute infrastructure. I mean, it's a move so drastic, it has the entire market just completely stunned.
And what a reaction it got. This stunning move sent the company's stock soaring by an incredible 582% in a single day of trading. The market's reaction was just explosive, and it left investors, customers, and all of us analysts asking the exact same question: how on earth did we get here?
To really understand this absolutely radical pivot, we first need to look at the crisis that forced their hand. So, let's rewind the clock and take a look at the slow, pretty painful decline of the original Allbirds brand.
The company's fall from grace was, frankly, nothing short of spectacular. I mean, after a super-hyped IPO in 2021 that valued it at $4 billion, the company basically just imploded. This timeline here shows a staggering 99% destruction of that value, ending with them selling off the entire brand for a mere $39 million.
Behind the scenes, the alarm bells were ringing, and they were ringing loudly. The company's own official filings admitted what a lot of people already suspected: the business was on the brink of collapse. They expressed substantial doubt about their ability to continue as a going concern. That's about as dire as corporate speak gets.
And this financial collapse, it was mirrored by a collapse in customer loyalty. If you look at forums like Reddit, the brand's original die-hard fans started complaining about a really significant drop in quality right after the IPO. It turned them from fans into really disappointed critics.
So, facing a total collapse with its brand in tatters, the company did something truly unimaginable. They pulled off one of the most radical, last-ditch reinventions in modern business history. Now, this wasn't some random Hail Mary pass. It was a really calculated four-step maneuver. Step 1, get rid of the failing shoe business. Step 2, secure a lifeline of fresh cash. Step 3, rebrand completely for a new vision. And finally, Step 4, launch a service in an industry they have never, ever touched before.
So what exactly is this new business? Well, think of it like high-tech real estate. The company, which is now called New Bird AI, plans to buy up all these powerful in-demand graphics processing units. Those are the brains behind AI, and then rent out access to that computing power. So instead of selling shoes, they're basically leasing digital brain power.
So here it is, the billion-dollar question. Is this a stroke of strategic genius, or is it just a desperate last-minute gamble? The market is, you can imagine, fiercely divided on this, and for very good reason.
Okay, so the optimists, the bulls, they see a really smart escape from a dying retail business into the booming AI sector, and it's funded with fresh cash. But the skeptics, the bears, they see a shoe company with zero tech experience taking a wild gamble. They think it's possible they're just slapping an AI label on themselves to ride the hype wave.
And that skepticism is running really high in the tech community. As this commenter on Reddit points out, without a clear competitive advantage, it's pretty hard to see how a former shoe company can realistically compete against established tech giants. A lot of people see it as just a name change designed to attract speculative investment.
Now here's where it gets really, really interesting. Let's look at the activity of the company's own leadership. In the 6 months leading up to this massive pivot, top executives, including the CEO and the CFO, were consistently selling their shares. And what's even more telling? They made 0 purchases. That raises some pretty serious questions about their own confidence in the company's future, doesn't it?
So, with all that in mind, where does the company go from here? The next few months are going to be absolutely critical. They're going to determine whether or not this gamble actually pays off.
There are several key milestones you should be watching for. First, the final closing of the asset sale. Then, the first major purchase of AI hardware. That's going to prove they're serious. But the ultimate test will be the announcement of their first real paying customers. That's the one we're all waiting for.
And this all brings us right back to the central question. Are we witnessing the smartest business pivot of the decade, or are we just watching a company's final desperate act? It's really one or the other, and for now, all we can do is watch.